Happy Tuesday to you. Welcome to the Investor Master Series. My name is James Boyd. We also have Barbara Armstrong back from the beaches of Maui. She should be back. Can't have that much sand stuck between your toes forever. So it's good to see you back, Barb. And also good to see many of you, Eva, Bill, Michelle, Josh Pink, Robert, Silas, and many others. Welcome to all. Just real quick as we're getting started, remember Barb and I do post on X. You can follow us there as well. Barbara did post those handles there. Just remember our first name capitalized, last name capitalized, just CS, okay? And I'll show you that here in just a moment. Also, a quick reminder that if anyone reaches out to you to solicit any product or any service, we don't do that, okay? So you know immediately that's none of us, okay? Now, also remember that options, we'll do, today our focus is really going to be on snapback rallies. And we'll talk about stocks, but we will also bring up options as well. Remember that options carry a high level of risk, not suitable for all investors. The information provided here is for general informational purposes only, not considered an individualized recommendation. This webcast discusses technical analysis. There's other approaches like macro analysis, intermarket analysis, fundamental analysis. They may assert some different views, okay? And so it's a good idea not just to learn one analysis. You could start with that, but also understand there's different viewpoints, and there's also different investors that use that analysis as well, okay? Now, also when we talk about investing involves risk, and also remember that past performance of a security does not guarantee future results or success. And today, what we're going to be talking about is snapback rallies. We'll take a quick look at index and sectors, but our focus is mainly going to be on stocks. And we're looking for stocks that might have been oversold, down near some horizontal support levels. Many of these stocks are coming into earnings, which we know can be a catalyst where some people might want to cover their short positions or bearish positions and maybe try to enter maybe some type of bullish position. That's going to be our focus here today. Now, what I want to do just real quick as we kind of have a set format of kind of how we like to do this. So number one is we always kind of look at the indexes, okay? And we like to look at that trend first, okay? We are not out of the woods on the SPX, the NDX, the Russell, and the Dow Jones. We are still in trend one. Price below both moving averages, this is the 10 and the 30. And so still having a little bit of pressure. Now, VIX that was near 21 yesterday at 18.9, fading a little bit. VIX is still in trend three, okay? So we're kind of still in that area where there's some heightened volatility. We don't see that the indexes have turned to a trend two yet, meaning price above the shorter term moving average. What we do need to know is if we said which index, though, is kind of getting a little bite first, it's the Dow Jones, okay? And we're also seeing that we see also with that is the Russell, okay? So those are the two that are kind of leading. So kind of keep that in your mind a little bit in terms of which indexes are leading first. And when we take a look at it for the week over week returns, okay, you're going to see the worst return was the NASDAQ, down 3.79, Russell down 2.7%, S&P down 2.6%, and the Dow Jones, seems like it was more, but it was only down 1.12%, okay? So more meaningful drop in the NASDAQ. And it kind of goes to show you when the market drops, sometimes the NASDAQ or the Russell can lead, and that's what we saw so far. Now, I want to just real quick speak to the sentiment that we talked about yesterday. The number of stocks above a 50 period moving average, just kind of get a sentiment gauge, okay? Only 21% of the stocks in the S&P 500 are above the 50-day moving average. That's it, still. Now, remember we kind of talked about the inverse relationship, right? When we have a low percentage of stocks above their 50 period moving average, you probably have high VIX. When you have high VIX, many stocks are down near support areas. So with that idea, we're going to talk about kind of putting on some bullish stock and option examples here today. And I don't want to waste any time, so we're going to get to that. Now, the one thing I want you to kind of notice is to be consistent with what we've talked about. We see rates here today, a little softer, kind of flat for the day, the 10Y, the 10-year rate. And we do not see the Japanese yen pushing to the upside. International, we don't see that. We have not seen that. This has been kind of more that gradual decline where just kind of things sold off. So don't really see a whole lot of fear here, okay? Now, let's kind of talk about some individual charts, okay? Now, if I pulled up some of these charts, let's go to the SPX first. When we look at the moving averages, right, we are not back above. If we're going to kind of reclaim the bullish trend, we need to get back above that line that we have had at 58.72. Today we gapped up, we rallied to the line. I swear on my life, I did not redraw this, and it kind of faded somewhat. It doesn't really matter. We need the price to hold the middle of yesterday. 58.06 is the marker there. If we're going to kind of get that little turnaround, 58.06, you need to write that down for a potential support. 58.72, the resistance area, okay? Now, quickly, NASDAQ, if we looked at, you're going to kind of see that the blasted moving averages, okay, are really that thick sheet of ice of resistance, okay? And so overall, same thing here. On the bottom side, if we're going to hold this momentum, 20,684. And on the top side, where it went to, right to the 20-period moving average, okay, 20,967. So, not seeing a reversal yet, but you're going to see that it did pop, it rallied, and so far the moving averages rejected again. Now, when you take a look at the Russell, some of the credit that we have to give to the Russell is that it fell through the 2200-ish area. Kind of yesterday was a hammer. Now, we like the we like the shadow of that candle to be longer, noted, but it kind of has like a hammerish candle, and we're seeing prices push back above where we broke down from. Smaller caps looking a little stronger here. Now, if you kind of said to us, would we choose in the paper money count small caps or large caps? If the Dow looks similar, we would look at the large caps just because we want more proven businesses and bigger income statements and bigger balance sheets. You look at the Dow Jones, the candle's not as big as what we see on the Russell, but nevertheless the same idea. 423, that's the marker. Now remember, I cannot stress to you the number of times we've talked about this. You can get the breakdown for just a couple of days, but if you see the price reclaim where we broke down to, that is a classic reversal sign. I want you to also notice the MACD, right? The MACD was down deep, and then it was down a little shallower, and then it's down even a little shallower or shallowest, okay? So the momentum, as we go down lower and lower and lower, it's not like the momentum's getting worse. It's actually going the opposite direction, which for a technician, they're kind of saying, hey, that's a little divergence, okay? So what does that mean? Put on bearish positions? Well, got to be careful, okay? You put on bearish positions when you get a divergence, the chances, the likelihood of those bearish positions working probably in a 20-day window or longer become less and less. Maybe in just a couple days, 2 to 3 days, maybe a week, maybe that trade might work. But usually when there's a divergence on the chart, it kind of goes more neutral, and that bearish drop of price just tends to fade out a little bit, okay? So that's kind of what we're seeing on the Dow, and we'll take it. Now, remember what we said yesterday, okay? If we're going to see this market reverse, we need to see participation from discretionaries, which we'll talk about, okay? When we look at discretionaries, what type of candle is this? Paul, what type of candle is that? Lisa, what type of candle is this? What's that one? And then tell me what that one is, okay? So that would be if you think we're hammering off support, hammer. And if you think we're kind of creating a potential support level or getting above the moving average, that'd be like an inverted hammer. Now, usually those might be some potential signs that, hey, we sold off intraday yesterday and then rallied back up near the high. And that high, which there's no upper shadow, was right at the moving average. Today we gapped up, rallied it, and we're kind of trying to sit there. Watch the level of about 22.36 on discretionaries. Of course, when you're thinking about discretionaries, you're thinking about Tesla. You're thinking about Amazon. You're thinking about Apple, okay, among others. Briefly, last one is when we look at tech, we're not seeing that rally that we're seeing on discretionaries. What I saw this morning, and tell me if you saw the same thing, industrials finally look like they got a little life. Bullish engulfing yesterday, a little push to the upside. Better movement in industrials. Kitty cat, meow. Okay, now we know that John Deere, the big green machine, had a big day yesterday, and could other stocks kind of go in line? So far, we have not seen hardly any pullback in the big green machine at all. Matter of fact, it's been a tepid pullback so far, which kind of makes you think that everyone that got in yesterday, or some people, nobody really wants to sell. Why? Well, they might think it goes higher, okay? So keep an eye on John Deere and the other names that kind of might be similar in that space. We brought up the agriculture names yesterday that have actually had a pretty good move. Why is that? It's because corn's actually been pretty solid here, okay? There it is, hitting a brand new high. And also, if you look at soybeans, pretty decent push, okay? Decent. Corn stronger. And if you look at wheat, nowhere near. So the movement is coming through corn. And of course, for these farmers, to buy these big tractors, which are not cheap, where's the money coming from? Okay. And by the way, if you look at feeder cattle or live cattle, those are hitting brand new highs as well. Okay. Some people might be interested in that. Now, let's kind of talk about one other area. So industrials, keep an eye on as far as reversal potential. The other one that we actually saw some better movements in after just a water slide to the downside was base materials. Better move here. Yesterday we talked about steel, United Steel, X, the ticker symbol, and STLD. Okay, so could maybe some of those areas get a little push as well. Okay, now are there any questions before we kind of look at some of these stocks that might be down near some potential support areas going into earnings? Are there any questions? Now, let me kind of go back into a question, which was MBUs, okay? Was CAT has RS? I mean, how would we, so this is a question, okay? How would we really know, does CAT have RS? And RS being relative strength. So let's kind of just make a quick list and kind of say, is Caterpillar really one of the ones that really has relative strength? Now, we could pull up, just real quick, show it two different ways. Let's just kind of type in relative strength at the bottom, relative strength here. Move that out of the way. And of course, what I'm going to do is I'm not going to make it to the SPX. Well, first off, I could. But if I said, hey, if I looked at Caterpillar and said, does Caterpillar have relative strength compared to the benchmark of the SPX? That red line is the SPX, the benchmark. Are we starting to see a little relative strength on Caterpillar compared to the S&P 500? You could say that in the last probably 2 days, okay? But what you're going to notice is it's been sinking closer and closer to the benchmark. So relative strength on Caterpillar has not been great probably since about, let's say, October. There was a little spurt in there, right there, okay? But most of it's been short-lived. Second way we could do this to kind of say, well, what stocks are in that area? Let's go to scan real quick. Mark price, okay? Let's just say we're going to look for any stock greater than 40. Since we're only into the market maybe less than an hour or so, hour and a half, let's just say 1 million shares traded so far. Now, that might be a pretty high bar considering it's only been not even 2 hours. And let's just say scan in the S&P 500. Let's go by industry. We really want to go by sector. And I'm going to go to, let's say, just industrials. What stocks are above 40, have 1 million shares traded so far, not average volume, traded so far when we do this. And now what you're going to see is got 71 matches. Now, if I'd say, hit me with it, how many stocks are in this area of industrials, okay, industrials of the S&P 500, and you're going to notice that if I pull this up, let's do this. Let's now take this over to the right-hand side, save as a watch list. Now, by the way, when we look at this list, I'm not seeing any of these stocks like Caterpillar or so on. I'm going to lower the threshold for volume for just a sec to see what we grab. And if I scan this, yeah, there we go. Now we're going to get a little bit bigger list. And that was my concern. If we run this 90-ish or minutes into the market, are we really going to find the Caterpillars, the CMIs, the John Deeres, and so on? Now, if I do this, save as a watch list, we're just going to name this industrials. So the way we would verify, do we really have relative strength? Let's go to Market Watch. Okay. Let's go back to this, that personal list, and we just made the list of industrials. 10, 21, etc. That is relative strength compared to the S&P 500. Okay. Now, by the way, on those headings, if you wanted to, could you change that to the sector? Oh, you sure could. Okay. Now, the one thing we noticed about industrials, there's some pocket of green there. Okay. There's quite a bit. If you pulled up, let's say this, if you pulled up staple stocks or real estate stocks, you're not going to see this much green. Now, when we take a look at this, there's Carrier, there's Caterpillar, ETN, there's GE, and I want to talk about that. There's GEV, which we talked about probably about 10 days ago. And so I want to kind of now move just real quick to that GEV and GE. Now, we've talked about GEV. Some of you have even kind of mentioned it, okay? Now, what I'm going to do is, if you also pull up, there's UAL and there's DAL. Now, I'll be honest, when you look at some of the moves in the airline stocks, I don't know if they're like putting in the cargo hold gold bars, but it's just like, wow, some of the moves in those stocks have been unreal, okay? Now, let's go to just real quick GEV, okay? Now, if you look at GEV for just a moment, okay, let's pull this up. Let's zoom in. So it's GE Vernova. What in the heck is that? That's a good question. What is it? Okay. Now, the reason why this is kind of interesting in the space of industrials, the old line of resistance was right about 351 and change. Then what you're going to notice is the stock popped up above that. And what day tends to be the high before the pullback? It tends to be the second day. True to what we say. My gosh, there's the pullback day, a little red candle. Then we fall down to the moving average line. For someone who said, I'm going to wait to buy if we pull back to the 351, they had chance number one, they had chance number two, they had chance number three, if they were serious. And then today we get a little gap. Why is there a green dot on the chart? Well, that green dot on the chart really represents a close above the high of the low day. The low day strictly being the lowest, most recent red candle. You only have one red candle. It's pretty easy to identify the high of the lowest, most recent red candle. And if we're trading above it even intraday or closing there, that's why there's a green dot. Got earnings coming up. Now, let's just do this just real quick because we're going to do a trade on this and GE. Now, what I want to do is I want to go to analyze for just a sec. Let's go to just real quick fundamentals. Just want to see what they do, okay? So it's an energy company, okay, based out of Cambridge, okay, nice area, Harvard, okay? You're going to see the generate, transfer, orchestrate, convert, store electricity. Now, this has not been a company when we talk about, let's say, utilities or something like that, where we typically talk about it. They do power, wind, electrification, okay? Nuclear as well, service gas, hydro, steam technologies. But they're really more in the energy than they are in utility, but you could almost say similar. Now, what I'm going to do is I'm going to go back to this. I'm going to right-click on this chart, okay? That's a $382 stock, so we're probably only going to be able to do that in the IRA account. And I'm going to go to that IRA. I'm going to pull it up on the GEV. Let's go to the chart, GEV. And what I'm going to do is I'm going to right-click on this chart. Now, by the way, how many charts look like this in the current market that they actually broke out above old high? I'm going to tell you it's not many. So number one is it didn't even pull back that much compared to many, many other stocks. That tells you something about relative strength compared to the S&P and maybe even the group. So we're going to put a $6,000 capital size, okay? $6,000 capital size. How many shares is that going to be? It's about 15 shares. Now, what we found out yesterday is that overall can't do fractional shares. So I'm just going to change this to say 15 shares, okay? Buying 15 shares, selling 15 shares. Now, what we're going to do is we're going to set the stop. Now, number one is, could we set the stop down here? Well, you could, but that's quite a bit of room there, okay? What I'm thinking about is, wonder if we kind of set it down below yesterday's close. Yesterday's close was about 365, less 2%, and it's really getting us to about 357.70. Okay. Now, if we took that loss, it's about 30 points on 15 shares. It's a loss of about potentially $450. Okay, $30 per share from where it is now, about down to there. About the way it's about 25. So that loss would be forecasted to be about $400-ish, $4.25. Now, what I'm going to do is let's kind of take this back. 357.70, stop dated GTC. This is a stock trade, okay? So if we set our stop, if the current stock price is here at 382, stop is 357, it's $25. Check me. Got 15 shares, $375. So it's not as much as I said 400, $4.25, it's 375. Okay. Now, the stop doesn't guarantee that it's going to sell out exactly at that price. It's a trigger to sell. So we're going to kind of say that that's the idea, but we need to see where the stop is. Now, I'm not going to put a target on this. Okay. Some trades we might just want to try to have and or move up stops to see if it can't trend. Notice there's not a commission for the stop or the entry. And read that line in red. If that's okay, we're going to go ahead and send the order. Now, the other one, just real quick, when we go back to this GE, you're going to see that when we look at the stock GE, it's also kind of had a little pop to the upside. Now, there's GE Aerospace and there's GEV. I don't see that logo like we saw in GE. I'm not sure if there's a relationship. That would be kind of a good thing to double check. But just kind of keep an eye on GE as well, which has also had a little pop to the upside. The reason why this is also of potential interest to maybe just watch is that we kind of had like a downward sloping line of resistance. Today, it popped above that line. And if you're a bearish investor, you wanted the price to stay below the line. If the price gets above the line, you're starting to see in the shorter term a higher high. And if you make a higher high, well, you can start to make higher lows. You make a higher high, a higher low, you're actually starting to reverse that trend. Now, I want to just real quick so GE, GV, GEH, they spun off. Now, I have a friend here locally, and historically, he worked at GE. And I remember him kind of talking about how there was a lot of they split the company. And I don't know how many different sub companies they actually have, but it's just kind of interesting. Long time ago, probably 5-7 years ago, it was severely under pressure. GE, though, has done a phenomenal job turning that around because where it was before, it was pretty ugly. Now, I want to go back to just real quick a couple of Dow stocks. We see Apple, which has kind of been on a double black diamond ski slope. Very aggressive to the downside with earnings upcoming, okay? Now, I want to kind of do this as an example of now, I can't see the earnings. If we cannot see the earnings, let's go to the gear just real quick for chart settings. Let's go to where it just says time axis or axes, and we're just going to say, give me 20 days to the right, about 1 month, okay? Apply, and then okay. So we can see that there's earnings coming up for Apple on January 30th. Okay? Now, we look at where the stock is now, it's been horrible. Nobody's going to argue that the lines on the moving averages are red. Now, when we're in trend one, which we still are, buying a stock might be more aggressive because your delta is 1. Okay? You feel every bit of that movement. Okay? Now, if we did, let's say, like a short put vertical, the delta would be like 0.10, okay, or 1/10 of 1%. Now, it might even be less. So what we're going to do is we're going to try to actually think that maybe are we at a spot where Apple might try to bounce, and are there some investors that might try to take advantage of buying Apple just to maybe go into the earnings? Now, how far are we away? About 2 weeks. Now, there's good and bad here, right? We know that when the prices fall down, volatility go up. Now, it just so happens to be that last week's class that I'll pull up just real quick is we talked about this. Pull that up right there. There you go. Now, last week's class we talked about, let me send this link out to you, using volatility to create new positions. Sounds interesting. Now, what I want to do is I want to go back to this and kind of look and use the strategy of a short put vertical. Now, what you're going to notice is as the price has been falling down, the implied volatility is beginning higher and higher and higher and higher. Why is that of interest? Well, higher implied volatility, bigger premiums. Bigger premiums, lower break evens. Lower break evens, greater chance to be potentially right, okay, at expiration. So now here's the deal, is if you said, James, I'm concerned about, is this 231 really going to hold? Well, no one says we have to sell the 230. Wonder if we sell the 225, okay? Wonder if we try to give a little bit of time here. Now, what I'm going to do is I'm going to go to the paper money account. Let's go right back to work, okay? We're going to go to the 21st of February with 38 days remaining. And let's kind of go look at, let's say, is it possible to maybe sell the 225 and then for downside protection? And something we talked about last week, we said if we're going to be bullish in the paper money account, we want trades that have defined risk. Okay? Now, if they have defined risk, most likely they're not as capital intensive for the most part. Okay? Now, what you're going to notice is we're going to sell the 225. This expiration is going over, okay, the earnings. So if you said, I am going to hold over earnings, potentially, you got to think that Apple, the company, might have some earnings that might meet at current expectations. Maybe they might even raise the expectations. This is not something that you would consider on a company that is just kind of falling apart like Nike. That's not doing it right now, outside just going down. Now, what we're going to do is we're going to go to the 225 to 220. Now, notice when we look at the implied volatility, it's not super high. Don't worry, I have another one coming up in just a moment. It's not super high implied volatility, 28. Now, if you said, well, James, I want to go a little bit closer to where the implied volatility is a little higher, then you might go to the 31st of January or the 24th. Why are we going out here? Because I want a little bit more time to try to have some of the volatility to work through the market, okay? Fear doesn't last forever. Now, what I'm going to do is I'm going to pull this up, and if we look at the reward relative to the risk and look at the percentage, 116 over, okay, pull up the calculator, 116 over 384, and it's going to give us an ROR of 30%. On a calculator, just take 116, divide 384, and it's going to give us 30%. Now, for some investors, they might say, that's some of the numbers I like to see. It doesn't guarantee that we're going to be right, but it kind of at least the setup, okay? Now, why are we not buying the shares? We try to make it a habit of if the moving averages are red, it's too early to get in. Okay? At the minimum, we would want to see the shorter term moving average green. At the minimum, we like to see the price above the 10. Don't have that. So if someone's doing something like this, they think they're in the vicinity of actually where that support level could be. We're going to go ahead and in the IRA, we're going to actually change this to 2 contracts. 2 contracts there, max loss would be in this case 766. Cannot go more than 1,000, okay? Hence the 2 contracts, okay? Now, let's just real quick, so one of the comments from MBUs is BlackRock and Vanguard shareholders in GE, or they're the largest shareholders, of GE and GEV. Okay, yeah, so BlackRock, you're talking about, look, assets under management, monsters, okay? Going to go ahead, and by the way, it's probably not talked about enough. Cost of trade included in commissions, nope. Buying power effect matches the max loss, given the vertical, send the order, okay? There it is. Now, so I want to kind of bring up something just real quick. Now, I'm going to try to get this trade to fill just momentarily, okay? So if we go to cancel place order, I'm going to try to maybe lower that credit for just a smidge. Why? Well, because I want to look at the delta, okay? So if this trade, now, by the way, the other way we could see it is if we sell the 225, which has a 28 delta, and we buy the 220, the delta is 7, okay? Now, that's per contract. If we had 2 contracts, the delta would literally be $14, okay? Now, so that means if this stock were going to go down $1, this vertical should be down about $14, theoretically. We go down $2, it's going to be down about 28. We go down $3, you're going to see that we're down about 42, and you get the drill. And all of a sudden, you're like, wow, so if we're a little early, and if we go down $5 more, that's not necessarily like lights out, okay? Like I've lost all my confidence. If it goes down $5 more, we'd probably be down approximately $70. Now, is that true if it did that in 2 weeks? No, if it took time to go down there, that might not, the loss, unrealized loss might not be as bad because that time decay. So that's why a lot of times when we think we're in the area of where the support is, short put vertical, okay? Probably more than long call vertical, okay? Because you're trying to do a probability-based trade. But if you did this with a stock trade and you got in early and it goes down $1, $2, $3, $4, $5 and you got 100 shares, it feels dramatically different than a short put vertical, okay? Make no mistake about it. Now, what I want to do is I also want to go back to just real quick, just kind of bring attention to another stock that's kind of getting in that oversold territory, Microsoft, okay? We're not going to do a paper trade on it, but it's coming right back down near the bottom of the channel. Keep an eye on that one. Now, the other one I'm going to also look at is MSTR. MSTR, if you're someone who likes volatility, well, the volatility on this one has been quite high. Go to the trade tab for just a moment. The volatility, even if we look out, so say 40 days to expiration, it's at 114, okay? Now, why is this of technical potential interest? Well, this is your drop down to a lower low, come back up, lower high. Drop down to a lower low. Low, low. Now, if I've done my job well, okay, you'll see that we ran to the upside. That's a higher high relative to what? The middle of the W. What type of W? It's a slanted down W. Now, wait, hold on. If this right here is a higher, Jax is even getting a little excited. I've taught him this well too. If you could hear it, Sparky barking in the background. Now, that's what I have to deal with, okay? Now, a little fun. I know some of you want to know about Jax. He's doing well. But when I get excited about this, he gets a little excited about this. Now, higher high. And what you're now going to notice is we've had a little pullback. That is not as low as before. What does that really mean in the shorter term? It's a higher low. Now, what I'm going to do on little micro strategy is we're going to say, look, we're going to take a bullish trade, kind of more conservative. When we sell something, we tend to focus on a delta of 30 to 40, okay? Now, if this stock goes way up, way down, maybe we don't kind of do that probability or pick a delta in that range. Wonder if we did something a little bit less. Well, let's look at that. Now, we know that if you have higher implied volatility, you could go up on the option table, okay? Why up? Well, because we're looking at the put side. And what I'm going to do is I'm going to change the strikes here, okay? And what I'm going to do is I'm going to look at the ones that are maybe in that mid 20-ish delta range. Now, you're going to see that we're talking about the February expiration, 38 days remaining. Now, what we're going to do is we're going to right-click on the bid of the 290. We're picking something in the delta of about mid-20, selling that one. We're trying to pick a strike that has a greater chance where the stock is not going to be below that. It still could. A 26% chance as of right now, okay? And then what we're going to do is buy the put below that, okay? Now, we're going to see if we can't get a little reversal on MSTR. Now, on this 290, 285, $1.75 credit, maximum loss, survey says 323. Let's look at the numbers. 177 maximum gain, divide by 323. Now, if you take a look at this, notice the RR is a lot higher. Why? Implied volatility. With the higher implied volatility, we went further down on the option table, or up, and I should say we went up on the table. We looked at the 290, the 285 for a potential reward or credit of 177. Now, in the paper money account, we're not going to do 2-3 contracts and push it to the extreme. I'm going to do 1 in the margin, 2 in the IRA. Now, let's go back to how can you do that if we had multiple accounts? Single account, multiple accounts. We're going to go 1 to the margin, doink. We're going to go to the IRA, push 2. Okay? Now, the comment really came from Agrabah. I got to rip. Oh, geez. I'm going to say A. Okay, I've slaughtered your name. You can call me Jamie to make it fair. Okay, that's always the rule. If I mess up your name, you can call me Jamie. Okay, that's not my intention. Now, what I'm going to do is this is going to be 3 contracts in total now. Okay, send that order. Now, the one comment is look at the beta. Well, if we pull up the beta of this, how can we see that? Underneath the underline, stock information, we just click on that little drop down all the way over to the right. What you're now going to notice is I have a fast beta. So fast beta would be for the last year, beta over the last 5 years. That's not a future number, okay? That's just saying in the fast beta last year, beta last 5. It's just telling you that it's moving about twice on a percentage basis or more than the S&P. It's volatile. Now, we know it's volatile because the implied volatility is off. It's a lot higher than most stocks, okay? So that's where you can see that. Think of beta as a volatility score for a stock investor, where an implied volatility is an option volatility score, okay? Or a range, okay? You can think of it as also like a percentile, if you will, at the bottom of this as well. Now, I also want to kind of make mention of one other stock that we're going to look at, okay? One of the other stocks that's kind of coming into earnings, speaking of discretionaries, is Starbucks. Now, what you're now going to notice is our focus here today is kind of looking for stocks that have kind of had some snapbacks. Now, when I'm looking, let's say, our technician is looking for higher lows, you can see a lot of these higher lows by these red and green candles side by side. Red and green candles side by side, okay? And these really mark higher lows. What's confusing about that is, well, James, it didn't pull back that much. Was that a bad thing? No. And then it ran up again and it pulled back for just one day, and then it started to go up again, hence a green candle. Well, I want a deeper pullback. Wait, do you really want a deeper pullback? If you're bullish, maybe not. These mark the higher lows. Now, what I'm going to do with earnings coming up on the 28th is we're going to buy the shares of the stock, but I'm going to make this trade based upon if we take out today's high again. What's today's high? 94.83. Now, what type of order is if we go at or above a certain price? What is that? Is it a market order? Is it a limit order? Is it a buy stop order? And the answer is it's a buy stop order. Buy it if we go at or above GEV fills. We're going to say, look, buy it if it goes to 94.83 or higher. Now, I'm going to right click on the chart, buy custom with OCO bracket. Now, when I put my cursor right on that 94.86, I'm going to put it right there, 94.86. So if we take out that high, stop. Okay? Now, for some of you that says, I do not like this order where there's no ceiling on where the cap is. Fine, let's have it your way. It's all about you. Okay? 94.86. So we're saying, look, do not get in until we take out today's high. But there's a ceiling on how much we're willing to buy it for. Normally, we might say the distance between what that trigger is to the cap or limit is 25 cents, 50 cents, maybe $1. I'm going to use 50 cents here. Now, the risk of that order is, what if it gaps to the upside and it never comes back down in this range? It doesn't fill. Okay? We're going to do dated GTC for that order. And what we're going to do is we're going to put a target right at this old high, which is in the vicinity of 102. Now, wait, is this a stock or an option trade? Well, if right here it says stock trade. Now, as far as the stop, we're going to set the stop. It could be underneath 91.33. We want to give a little bit more breathing room. Okay, maybe 89.82. If I took 89.82 less 2 to 3%, it's going to give us 88.02. Now, you got to be careful a little bit going into these earnings, because if you said, I'm going to just set tight stops, you're just going to stand a better chance of getting stopped out. Now, what I'm going to do for time's sake, if I kind of think, well, how many shares would that be? It's really going to be about 60 shares of stock. 60 shares of stock on a $95 stock, it's going to be right around about $6,000, the cap. Okay? So that's going to be our last trade here. Now, this is a GTC order, which is 180 calendar days that it's good for, okay, if you don't touch it, okay? So we got an entry price, that price or higher, with a limit there. Second, we got a target price, and then we got a stop underneath. Now, we're going to go ahead and confirm and send, read that line in red, and we want to verify, is that something we would consider? If it is, we're going to fire it and see if it can't fill. Notice that order's sitting there, and we're trying to catch that snapback rally. I'm going to tell you, you're not going to be good at catching snapback rallies unless you learn orders, okay? That's critical here, okay? And now I'm out of my time here, but I want to kind of wrap it up. So one thing is, if you have not realized that we're on YouTube, which I think you have, else you wouldn't be here, make sure that you tell your family, friends, coworkers about, hey, you can learn about the markets, different topics, just by going to YouTube. And our channel, Trader Talks by Schwab Coaching. It's free, okay? Now, also, subscribe right in the middle of the page. Second, if you said, hey, do we actually have a page for this class where we could go back like TiVo and see the prior episodes? Yes, right here on the right-hand side. Coming up next, we will actually have a class with Getting Started with Options, Cameron May. Also coming up 2 classes after that, Barbara Armstrong will be teaching Getting Started with Technical Analysis. So thank you, Barbara. Thanks to all of you. Got to wrap it up here. But I want to say that this has been our class focusing on snapback rallies. And we kind of talked about the market might have a pretty good chance of doing that. We'll keep an eye on that. Did a number of trades here today in terms of options and stocks. Stay tuned for Cameron coming up next. Have a great day. And this has been the Class on Investor Master Series. Take care. Bye-bye.